Despite a hawkish Fed minutes report and no clear indications for a rate hike pause on the next run, a massive statistical setup is looming over us with conditions almost set for a launch. The broader markets are bleeding with the FOMC report and the asset remains with its posture. Welcome back to this Hump Day Wednesday. This is ARCa and let's dive into ticker symbol COSM. Let's kill them, team. What is up, you guys? Thank you so much for stopping by once again. Let's go ahead and go over the ticker symbol COSM charts, right? I almost said it wrong, and I kid you not, I had to redo this introduction probably 16 times because I couldn't say, for the life of me, man, I could not say ticker symbol COSM. I was like, fa. But man, 16 times is a charm, I guess, right? So we are here, we are back, we are live. We're doing this continuously, team. So let's go ahead and take a look at the 4-hour time frame for COSM. And as you can see here, or as you can hear, you may actually get the little guy saying hello here as a co-host. What's up, buddy? Don't run too fast, all right? So remember, team, that it's just me and him right now. It's just me and him right now as mom is actually out of the country. So if he does come by and say hi, just go ahead and not mind the little guy. He just wants to make sure that we're remaining bullish right now with the amazing news that the CEO, Greg Siokas, is showing us, right? So let's go ahead and dive into that right away. So please notice that he did tweet this. In case you didn't catch this, right? He did tweet. I want to just go ahead and point out the very obvious thing here, all right? Book value greater than $4 per share. We are doing way more than we have managed to communicate, focusing on operations and efficiencies as we scale up on Cosmos. All right, so we will work on transmitting our thoughts in a better way. Please know that that is actually the CEO himself recognizing that there could be better communication with their advancements and stuff, right? They're just not, they're recognizing that the retail is asking for that. Right, so this is absolutely bullish for the asset. I'm very happy that Greg did put this out. Right, as you guys know, I'm not the biggest fundamental guy, but I am a statistical guy. So regardless of the fact, it's my job to go ahead and show you what's going on here in this channel, okay, team? So let's go ahead and just block this out of the way right now and go ahead and take a look at the charts where we absolutely belong. So please notice that this is the ARQ algo DBSI, okay, team? So whenever every candle, you see this amount of numbers here. That's the positive versus the negative result, or meaning that it has, like, for example, if you have an 80 score, you have a 20 in the inverse, just like this, right? 80 down here, 20 for the Bears, right? You have a 3 for the Bulls right here, 97 for the Bears, right? So it takes a score whenever any candle is upside of the 13-day exponential moving average and adds that towards the Bulls. Whenever we are under the 13-day, it adds that towards the Bears. So that cumulative score, whatever time frame you're in, shows up in a relative strength display right up here. So right now in the 4-hour time frame, COSM bulls are leading the way by 95% over 5%. And this is actually a very good sign because a lot of things are suggesting a potential reversal or potential upside continuation. Right, so this is very good since the fact that, since the last time we looked at this, not looked at it, right, I guess so, right, we were looking at the 111 bottom, and we said that a pretty massive upside was to follow, right, so we did get that, and we're still remaining pretty high from that target. We are still up about 18% up from that low, despite, I'm saying, keeping under deep consideration the markets, team. We are bleeding like crazy in the markets. Today was a little bit of a slower day. I get it, but this is still very dangerous. Please look right over here. Right, the SPY absolutely bleeding. Several points. This is breaking the inflection points right here. SPY is continuing to the downside. This is the ES, right? The S&P 500 E-mini futures contracts still suggesting downside. You can see that the IWM, which is the one that's directly correlated with the COSM asset, the Russell 2000 ETF, you can see that this is a massive drop right here and absolutely aggressive. And take a look at COSM though. COSM is remaining its posture despite that economic downturn. So it just goes to show that there are bulls in place And I guess the sentiment is not willing to let this go any lower than where it's at, right? So go ahead and get in touch with us at arqindicators@gmail.com if you would like to get your hands on the set of indicators here. This is only one of 8 magnificent algos that we have just recently received. I want to show you one more thing regarding the composure algorithm, right? The composure algorithm has been the center point of the algorithms that we just released. So this is very particular because I'm getting a signal here of a potential reversal. So this signal here tells you that the current trend may be over and there could be a continuation to the upside, right? And that is because we have not printed a blue triangle here since we got it at the very top over here. So we got that blue triangle saying that this trend, whatever this is over. We may be looking at a continuation to the downside. And of course it did. So now you can see the exponential moving averages here starting to converge. They're getting very close to each other. That usually means that we're prepping for an upside move. Now that we're getting that blue triangle signaling the end of a current trend, it's highly probable that we can start seeing some recovery here. Right. So you guys know from the last videos that we did notice a few iterations of manipulation in the market. Right. So it's very tough to see things like this. Right. That would introduce further downside here. But yeah, there's no manipulation in play right now. And there is, in fact, some signals for a potential upside coming in. So it is looking very good for the asset itself. So those are 2 of the ARQ indicators for you to just kind of get an idea over what they do, right? Several different uses, absolutely different signals for long and short, whatever you guys want, it is in there. Okay, team, so daily time frame here. This is the descending broadening wedge that we've looked at for some time now. And yeah, if it is the fact that we're going to start getting this upside here, you can clearly see that volume is entering the asset in a violent manner here. So there could be a shift in sentiment very soon for this. Okay, so if we do have shorts in this asset, and I'm talking about nefarious shorts, then they would be facing some turbulence based on the broader market thesis, right? Where we are looking for downside in the broader markets. So COSM and other small caps and micro caps may actually benefit from this fact. All right, so let's go ahead and continue on the analysis here and take a look at this, right? So still within the daily time frame, I would like for you to notice that this is a bullish crossover from the MACD, and we are now printing our first bullish bars here, green bars on the histogram, right? So we were noticing here that we had noticed it before that there was a bullish divergence, and that we would likely be facing an upside. This is how we were able to tell that massive 46% pump to the upside was going to be something that was happening. Okay, team. So I want to go ahead and talk to you about statistical setup here, as that is going to introduce us to something very nice. Now, one more thing, right? We also did point out that we would essentially be riding within this range here, right? So in fact, we pretty much have, right? So now we're making an upside move. It looks like the probabilities are still landing towards an upside, but let's go ahead and move on and see if we can validate. Okay, so yeah, I guess that we can talk about this one real quick. This is real fast. This is a 4-hour immediate short-term descending broadening wedge. It has already broken out of the true test number 5. And it is continuing here, suggesting a top side per the playbook rules. Remember, I'm not saying that we're going there. Per the playbook rules, this formation is traded to be, let's see, you would take profit from this formation at the genesis of the formation, right? So that's indicative of 198. Let's move on to the next chart, team. And this is, this is the correlation chart between the E-mini Russell 2000 Index futures contracts and the iShares Russell 2000 spot price, right? So this right here, you can see this massive downturn, huge price to the downside here, and COSM really not reactive to that, right? You can see before that it definitely was, it definitely was facing some of those pressures, but now it is actually maintaining its posture and getting ready for a potential breakout. All right, so now let's go ahead and touch on the statistical side of the analysis. And I would like to just point out here that this is a 5-day volatility versus momentum backtest, and this has been performed throughout the entire trading history of the COSM asset on the 5-day time frame. What this is showing us, or I can give you the context or the criteria first, right? So anytime that volatility has expanded into critical levels, which is expansion up here, and started at a contraction phase paired with stochastic momentum with an upside pivot, I've taken note of any time that has happened. And I've also taken note of the duration, the upside thrust, and the amount of times that the profile guessed the upside correctly versus incorrectly, right? With these vertical lines. So it just so happens that historically speaking, we have 6 out of 6 iterations, and 6 of those were guessed correctly to the upside, giving us a 100% upside accuracy. It's not going to be like that forever. We're going to get variance. It just so happens that we don't have a lot of data within this time frame. Okay, so the average upside thrust is 162.05%, which can be completed over the span of about 116 and a quarter days on average. This is proof of work here, and I have performed the standard deviation based on this 162.05% mean. So that standard deviation, which is in all essence the 68% of the performers on a bell curve, right? That would be 373.4%, with a lower bound of the first standard deviation coming in at 78.10%, which is absolutely a focus, and with the upper bound, which is the higher performers, right in here, right? These are the lower bound, and the higher performers are landing at about a massive 668.70% to the upside. So again, team, if you are not really familiar over what I'm talking about here, is just a criteria backtest. And we are about to set that criteria soon. I'm giving it to you right now so that we can evaluate the potentials of making these moves based on these samples, statistically speaking. Right, so all of this is just a mathematical model. It is not a certainty. They're just probabilities, right? So as this is very much like smart money practices, right? So but anyway, yeah, let's go ahead and point out the fact that we are increasing volatility and getting very close to that 90 percentile area, right? So that's what we need. In order for us to validate that we are making this move to the upside, we do need to be either within this zone here or contracting from it, right? So contracting meaning downside. Remember that volatility is direction neutral. It does not mean that we would actually go to the upside when we're expanding. We can in fact go to the upside while contracting as well. Okay, the point of this is that we're measuring it from critical zones. So in this case, yes, it's critical expansion, right, to contraction. As soon as we do touch either contractive levels or retouch the area of expansion again, that particular move would be invalidated and we would now continue on to a new one. All right, team. So yeah, just know that this still needs to enter the area of critical volatility and expansion. And we are already getting the upside pivot here on the 5-day stochastic momentum. This is why I'm giving it to you right now. We are preparing for the future. All right, team. So this is looking pretty good. And let's just go ahead and take a look at the time frame here, as we should keep that in mind. Right. So actually, we literally just started this 5-day candle iteration. And it's looking very bullish right now, and we're already getting that upside pivot, okay? So we have to keep this in mind. One more thing to notice here is that the ADX is currently sitting at 28.62%. Whenever this ADX is sitting above 25 or 30%, that is indicative of a very, very high likelihood of a continuation to that play. So now we have DMI plus, aka the green, aka bulls. They are leading the way, and we still have we still have the DMX sitting right above 25%, just under 30%. So everything is looking good statistically speaking here. We absolutely just need to wait to meet this criteria right up here. And then we will evaluate this. Okay, so I just wanted to make sure to get that out of the way so that you are in the know here. So now evaluating price action for the immediate short-term time frame, it does look like the 30-minute immediate short-term time frame, being this here, is still suggesting a slight downside. But I would like you to notice that this area here, this is the gravitational zone of the bear weakness percentile. This is bull weakness. This is bull strength, bear strength. All right. So the overall percentages is this is the bullish control zone, and this is the bearish control zone. Okay. So every area 2% up from the bounds, right? From these from the junctions, 2% up is gravitation, 2% down is gravitation. Every single junction. Okay, so in this case, yeah, we're sitting in the gravitational zone of the bear weakness percentile. This can show us or introduce a potential upside. Okay, seeing at the fact that we actually have this bi-hourly time frame at support and also in that gravitational zone as well, that bounce to the upside can be considered likely, right? So another thing that kind of supports that is the 4-hour time frame. It is currently, yes, falling beneath the SMA 14 represented by the pink line, but it's within the gravitational zone too. So this may as well bounce to the upside when this bounces to the upside. We would definitely need the 30-minute time frame to push through the SMA 14 in order for this to continue onwards and upwards, right? So in essence, the strength is still not quite there, but there could be. I don't know myself. I am not in contact with the CEO directly, but what I would say is that if there is some type of bullish catalyst coming in, this would be around the time where this asset can rip to the upside. So now the 8-hour time frame is suggesting a continuation to the upside. Similar situation here from the 12-hour. In fact, we're bouncing from the gravitational zone and the SMA 14, very healthy. The daily time frame is upside pivot as well. And the 3-day time frame could be showing us some resistance, but that is we would evaluate that later, as there's no clear indication as to where that can be presently, right? So now, if we are facing potential short-term upside, then let's just go ahead and add the averages, right? And see what we could be doing. All right, so there's an immediate resistance right up here at the EMA 55, which could be at 145. All right, so let's see, in a very discretionary manner, I can go ahead and just adjust that target to 143, and I'll give you the range too, just in case, right? 143 to, let's see. Yeah, I would say just about here to about 147. There could be a resistance here. We can always wake up to the top side of 153, of course, right? But we have to evaluate this first. So, this is also an ascending triangle, right? So this ascending triangle can lead to a pretty nice breakout, right? So we'll just kind of draw it in here like this so that we all are in the same page, right? So, yeah, something like this here, right? And I'll just go ahead and extend this out here. Right, and this is kind of suggesting that we would be converging price here until it's ready for a breakout. And that breakout would actually be a pretty nice move to the upside, considering only one of the psychological targets, right? So this would be one of them here. You take a trend line from the top side of the triangle all the way to the bottom side, apply it to the supposed area of breakout, which is sometimes 65 to 70% to the apex of the triangle. In this case, the very last psychological target, there's three. There's the center line and also the breakout line. This would be indicative of a move up to $1.96. Why does that sound familiar? Well, $1.96 just so happens to be the top side of this wedge, 198. And you want some more magic behind that? Let's see if we can get it. Okay, let's see if we can bring it just like this. Okay, 2-spot 272 and the 2 fib, landing right in between that, right? Oftentimes we get either the 272 or the 618. In this case, it is suggesting for us to find the range between the 2 fib and 2-spot 272. Dead in the middle. Perfect. 50% of the returns right there. And now I guess we can also consider taking maybe an overall range, maybe from here to the very lowest point, right? So let's see if that gives us anything of value. And what do you know? Look at that. 1-spot 618, dead in line with the 2-spot 272 at 205. There is absolute focus within that 205 target team, which is why I put it there. Now let's go ahead and just extend this and see if it rhymes with the top side of that candle. What do you know? It does. So you can see here that the high of this candle located on the H here, 204. Lots of confluence happening here, team. All right, so I'm not saying that it's ready for that move just yet. Okay, we don't even know where to measure that statistical upside, considering this the back test, right? But we can already see that 78-spot 10% would be the lower end of the first standard deviation. So I guess we can speculate. Let's just see, right? 78-spot 10%. Let's just take it from our current position, right? It's likely not going to fire from here, but it will, it'll fire from wherever it will when that time frame comes. So 78% to the upside. Let's see. That leads to what is this right here? Let me just go ahead and the 2 fib at 235, or just upside of the 2-spot 618 at 235. right? So, but we're talking about a potential upside before we can face a little bit of a retracement, right? So let's just say that it would launch from 121, right? If it did launch from that zone of 121 support, then your upside starts to look a little more familiar. 215 to 205 at the one spot 618. So that would be pretty nice for us to take a look at, right, team? So I just want you to know what I'm looking at here. I just want you to know the trajectory of which I feel the asset may or may not be going, right? Anything that I do say here could be invalidated by any negative catalyst or even a flash sell-off due to, similar to things to what happened with China and also with Russia with their 350 BIP rate hike. Lots of things like that can apply serious unknown factors into the plays here in the U.S., right? We can be declared into a state of emergency based on what's happening between just them two. All right, team? So please take whatever I do show and iterate within these videos as just a form of entertainment, as I cannot suggest for you to buy, sell, or hold any assets whatsoever. I need you to do your own due diligence and everything will be cool. But with that said, team, I wish you well. Very, 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 very good night. And I will catch you at the bell. Mañana, team. Adios. Yeah.